The jobs report for September put America's unemployment rate at 3.7%, the lowest it has been since 1969. Wages continue to tick up, and something we don't talk about that often, Ron, 10-year Treasury bonds hitting a 7-year high.
Should we say it? Should we give them a firing on all cylinders for the economy?
I think we need to.
It's pretty impressive. 4.2% GDP, as you said, lowest unemployment since 1969. We have the S&P 500 up 8.5% as a result. That's not including dividends. You add on those, you've got a 10% year, all things being equal. Now, not everything is always rosy because there's two sides to every story, and you worry about inflation when things are so good. Inflation's at about 2.7% now, a little bit higher than the Fed's target of 2%, but that's actually being rethought because perhaps it's kind of an arbitrary number, and maybe it is a bit too low. The interest rates you mentioned are actually a negative. Markets trade down on the highest interest rates, so we did see the markets trend a little lower as a result of higher interest rates. But overall, you know, we robbed Peter to pay Paul a little, I think, with these tax cuts, and we'll see what happens down the road. But for today, for now, things look pretty strong.
I agree with Ron. I'm really paying attention, though, to those hourly wages, because that 2.8% increase, you know, certainly not barnstorming, but I think watching that going forward is going to be important, because that's really a major determinant of inflation. If we do finally see a lot of wage pressure, that's what's going to bring the inflation. And you saw the 10-year yield hitting a 7-year high. I mean, there are important implications to that. Ron mentioned it, but as an anecdotal example, the interest rate on one of my rental properties just got adjusted. It's a 3-3 arm, so the interest rate adjusts every 3 years. Last month, it climbed a full percentage point.
Wow.
And so, believe me, I'm feeling that. And I think a lot of people, you know, around the economy who have loans like that or dealing with that, they're going to be feeling that as well.
Yeah, speaking of wage pressure, Aaron, Amazon applying some pressure on the competition this week when Amazon announced it was raising its hourly wage to $15 and encouraged others to do the same.
Man, they're just playing chess. It's pretty amazing to watch. Yeah, I mean, they're just giving politicians what they want, and then they can go do their own thing that others cannot copy them at.
Ron, when you look at the 10-year Treasury bond, the 7-year high, I mean, we're a show that's focused on stock investing, but how much higher does this need to climb before you start thinking about bonds in a really serious way?
A little bit more. We're not there yet, but it does even affect. I don't want to nerd out on anybody, but it affects the discount rates you use when you value equities. So the higher the interest rates, kind of the lower the present value of future cash flows are, and that actually lowers value when you run the numbers. In addition to, and in conjunction with actually creating competition for stocks when other investable assets become more attractive.
Right. I mean, it's just the relative attractiveness of stocks goes down as yields go higher. And that, for us foolish investors long term, it really probably doesn't matter that much. But it does matter for institutions who are moving around a lot of capital. So I think that's why you're probably seeing a little bit of volatility come back to the stock market this week.